Hello, everyone. Can I get a mic check out there? Just want to make sure people can hear me. Should be a questions box you could throw in there. Oh, perfect. Perfect. I'm going to give it maybe 30 seconds to a minute just to wait, see if there's more people coming so they don't miss it. I will give a short presentation, just go over EdgeClear, there's a few things we're doing this month that we want to share, and then I will pass it on to John, who will be talking about the micro ether futures, which is why we're all here. So mine will only take a couple minutes. Okay, I think that's enough time. While we're going through it, while John's presenting, you're more than welcome to list any questions. I will be monitoring the questions box. So if you do have any questions while going through it, I will try to get to each one and stop John and ask him those questions. But let's move on. First things first. The risk of trading futures and options can be substantial. Trading derivatives carries a high degree of risk. It may not be suitable for all investors. Past performance is not indicative of future results. And then also, EdgeClear LLC is a member of the NFA and is subject to NFA regulatory oversight and examinations. However, you should be aware that the NFA does not have regulatory oversight authority over underlying or spot virtual currency products or transactions or virtual currency exchanges, custodians, or markets. This will be our agenda. I'm just going to talk a little bit about EdgeClear and what is new. Then we'll pass it over to John, where John will go through the evolution of crypto derivatives, product overviews, review the recent Ether price action, examine the volatility in crypto markets, trading examples, and more. What is EdgeClear? EdgeClear is an independent futures broker created by traders for traders, an award-winning team, multiple clearing relationships, experienced team and founder in Moorhead Ascar, Future Trader 71. We're continuously innovating and building, and we are trader inspired. What is new? I just want to kind of let you all know what we're doing this month and what we've launched. For one, any new traders of EdgeClear, so if you open up an account and fund your account in December, or if you've already had an approved account, you just didn't fund it, and you funded it in December, all of your commissions for December, less fees, we will donate. We're going to be donating that to the St. Jude Children's Research Hospital. It's our way of giving back, I guess you could say. Also, Sierra Chart Teton order routing is now available through EdgeClear. So give us a call and we can kind of go through that a little bit. edgeclear.com/Sierra Chart, and then myed.ge/St. Jude for more information on that. And then EdgeProX. EdgeProX is a software that we have launched. It is an all-in-one solution for active traders. It has an advanced DOM featuring MBO capabilities, volume profile and TPOs, native order flow tools that consist of a heat map, footprint, large blocks, and then cross-instrument trading. Cloud levels, we have developed an EdgePro line that we can go over if you give us a call. 300 plus studies and indicators, indicator lighting. It is a Windows, Mac, and Linux platform, and it runs on multiple data feeds. You can go to edgeprox.com to get more information. Questions or support, and that's all we're going to do today. But thanks for coming on. Kidding, I like to do that every single time. John's heard me say that a few times. So I'm going to pass this on to John now, but this is our contact information. I'll bring this on at the end of the webinar as well. But John, I am going to pass this presentation mode to you.
Great, thanks, Max. Let me see how to share my screen real quick. All right, let's get going here. Hi, good morning, everyone. First, Max, that was really cool about the St. Jude research offering. Very admirable what you guys are doing over there at EdgeClear. And then let's get started and talk about micro Ether futures. Good morning, everybody. Thanks for joining today. Today's session, we're going to talk about the launch of micro Ether futures at CME Group. The crypto craze has been in full swing for the last 18 plus months, and it's no exception at CME Group. We've been focused on this segment for a long time now. We'll go over the evolution of crypto at CME Group, but this will be our 10th micro product that we launched at CME Group this year. So I want to say thanks to EdgeClear for being a great partner and listing all these products and having us here to speak today. First, let's talk about futures trading isn't suitable for all investors. Futures are leverage products. So when you're going into a new market or a new asset class, please ensure that you're properly educated. If you're looking for any educational information on CME Group products or futures in general, you can go to cmegroup.com, click education on the homepage, and it will take you to the CME Institute, where we have thousands of educational modules on various topics and products. You can never have too much information. You can never know too much about these markets and products. So really encourage you to do your homework before trading any new markets. So let's take a look at how we're going to spend our time today. We've categorized it into three parts. First, we're going to talk about crypto and the crypto's futures background at CME Group. We're going to talk about the futures fundamentals and the features of micro Ether. We're going to take a look at those product specs and the various ways that people can trade these products. And then we're going to conclude with a few resources that the CME Group has available for traders looking into these new markets. All right, so part one. So what is Ethereum and what is Ether? Quickly, as many of you probably know, Ethereum is a blockchain technology upon which applications like smart contracts can be built. And a smart contract is a computer program or transaction protocol which is intended to automatically execute, control, or document legally relevant events and actions. And Ether is the cryptocurrency of the Ethereum network. And Ethereum debuted back in 2015, and at that time, Ether was trading at less than $3 per token. And Ether currently, and this is a little different than Bitcoin, Ether, it currently doesn't have an issuance limit or a defined monetary policy like Bitcoin. Bitcoin has a finite amount that's going to be in circulation. It's going to be 21 million Bitcoin. With Ethereum, it doesn't have a finite limit. It has, it's capped at 18 million Ether a year. So 18 million Ether go back into circulation every year. And here's just a few bullets on what Ethereum and Ether are. So what's the Ether and Ethereum futures narrative at CME Group? Why are we launching these products today? One, we're launching a micro Ether product because we wanted a smaller offering of our standard Ether product. We launched our standard Ether futures contracts back in February of 2021, and that's a larger contract. It's 50 Ether per contract. And with this new micro Ether, it is 1/10 of 1 Ether per contract. So it's 1/500th of our standard Ether futures. And one of the main reasons why we're launching this contract today is because the price appreciation in Ether has skyrocketed since February of this year. Ether today is trading at over 41, it's right around 4,000 per token. So as that price appreciated, our clients, especially on the retail or active trader side, they wanted a smaller, more precise, more suitable notional contract to trade. So that's one reason why we're launching this micro Ether contract. We launched this today. I'm going back a little bit. We launched this product at last night's open for today's trade date. So this product is currently trading. Another reason why we've launched our crypto contracts over the years is that we've seen a lot of money start flowing into these alternative investments. We've seen money start going into the Bitcoin contracts, into the Ether contracts, and we want to provide these contracts to our customers So they can trade these cryptocurrencies in the same accounts that they may be trading their E-mini S&P or their crude oil contracts. And cryptocurrency is quickly developing a reputation as an inflationary hedge. Ether is now being compared as the digital silver. If Bitcoin's the digital gold, Ether is being looked at as the digital silver. And underlying blockchain technology is gaining widespread acceptance globally. I feel like every day we're reading an article that there's another institution or there's another retail outlet that's accepting cryptocurrency, that's adopting this technology, and I believe it's here to stay. So we're seeing this trend continue. One thing to note is that cryptocurrency, especially Ether and Bitcoin, these are volatile markets, and where volatility is, investors and traders are flocking because they're looking to either manage some of that risk that they have in the physical underlying that they may own, or they're looking to come to these markets, capitalize on that volatility, and express an opinion. Another aspect is Ether, Ethereum 2.0 is going to be ESG friendly. It's moving away from a mining protocol, and it's moving to a proof of stake. So Ethereum 2.0 is going to be more environmentally friendly. And CME Group's crypto futures complex allows for risk management on a regulated exchange. So as you know, CME Group markets are regulated by the CFTC. We believe that our markets are an efficient way and a safe way to manage some of your crypto risk via CFTC regulated exchange. So let's take a look at the top 10 cryptocurrencies by market cap. On this slide, you'll see that Bitcoin is the largest cryptocurrency by market cap, and Ether is the second largest. On this slide, it shows that Ether has a market cap a little over $509 billion. I believe that's a little bit inflated as we've seen some price pullback in Ether over the last couple of weeks. I believe it's right around 490 billion right now. But Ether and Ethereum is the second largest cryptocurrency by market cap. So we're excited to launch this smaller notional and more precise contract today to really help the active trader participant capitalize on this large growing cryptocurrency market. So quickly, we'll take a look at how we've come to today. Taking a look at the evolution of cryptocurrency products at CME Group, we really first got into this space back in 2016 when we launched a Bitcoin reference rate. And what we saw at that time is our clients were asking us to put together cryptocurrency products. The first one we gave real consideration to was Bitcoin. And at that time, we saw that there were all these spot exchanges that were listing Bitcoin, but there was a disparity in price between each of them. So what we wanted to do first was create a blended price that takes the highest volume exchanges, the top 5 highest volume exchanges, and we take that price and we create a blended average price from all 5 of those exchanges, and that's what we base our Bitcoin price on. So in 2016, we created the Bitcoin reference rate, which is top 5 spot exchanges by volume. We take an average price, and that's our Bitcoin reference rate. So that launched in 2016. A year later, we launched our Bitcoin futures on that Bitcoin reference rate. So our Bitcoin futures launched in December of 2017. At that time, Bitcoin was trading right around, I think, 17,000 and change. And that is a 5-coin contract. So it was more institutionally focused. In 2018, we launched our Ether dollar reference rate, which is the same methodology as our Bitcoin reference rate. We take the top 5 exchanges, the 5 spot exchanges that list Ether. We take the average price of those, and that's what our Ether contracts are based on. In 2020, we listed Bitcoin options. In 2021, so now we're at this year, in February of this year, we listed our Ether futures. So February, we launched Ether futures. Those standard contracts are 50 Ether per contract. So at a notional of 4,000, you're looking at a $200,000 contract today. So It's a pretty large contract. In May of 2021, we launched our micro Bitcoin futures, which is 1/10 of one Bitcoin. And now today, December 6th, we launched micro Ether futures. These mirror our micro Bitcoin futures in the sense that micro Ether futures are 1/10 of one Ether. So if Ether today is trading right around 4,100 per Ether, the micro Ether futures contract carries a notional value of 410 Ether. So taking a look at how our ADV has grown over the years since we just went over that timeline, here's a graph that shows the increase in volume and participation over the last 4 years or so. So you'd see that our Bitcoin volume and our standard contracts, our standard Ether contracts, and our micro Bitcoin futures have all increased over time, and they really took off in Q2 of this year. And you'll see in Q4, we're averaging almost 40,000 total cryptocurrency contracts a day at CME Group. And it's been really fantastic to see this uptick in participants, in volume, and open interest. And it's further validating that the market really needs cryptocurrency derivatives. The market has seen what we've launched, and they're coming to trade what we've launched. And it's really exciting time for us at CME Group to see our cryptocurrency complex being used worldwide. We're taking a look at where that participation is coming from, and it really is coming from all parts of the globe. We've seen retail traders come into our cryptocurrency contracts from over 100 different countries, from all 3 time zones, and it's really exciting for us to see the progression and these markets take shape. And on this slide, you'll see that cryptocurrency derivative volume at CME Group versus CBOE or backed is skewed towards CME. And what this is showing us is that for regulated crypto derivatives exchanges and contracts that are trading on these exchanges, traders are coming to CME Group to trade crypto derivatives. And that's a good thing for the CME. So when you look at the price of Bitcoin to Ether price ratio, you'll see that they've converged a bit. And back in 2019, Bitcoin was at a 50 to 60 time multiple price-wise versus Ether, and now it's right around 12, I think, 12 to 13-ish, whereas Bitcoin's trading, I believe today, around 60,000 and change, and Ether is trading at 4,000 and change. We've seen Ether really appreciate in price over the last couple of years, and Bitcoin has as well. These markets are really volatile and really have seen some pretty substantial price action over the years, and now they're starting to tighten a bit. And when you look at the Ether to Bitcoin futures volume ratio at CME Group, right now, Ether futures, so we just offer our standard Ether contract futures, those are at about 60% of our Bitcoin volume. And that Bitcoin volume includes our standard and our micro Bitcoin. And we're hoping that with the launch of these micro Ether contracts, that ratio tightens a bit. That the Ether contracts at CME Group start trading in alignment to the Bitcoin volume that we're seeing. Okay, so let's take a look at the micro Ether contracts that we just launched. So taking a look at the contract specs, these contracts are 1/10 of one Ether. Again, if Ethereum or Ether is trading at 4,000 per token, then the notional value of our micro Ether futures contract is $400. These contracts are traded during our standard market hours, so they're traded from Sunday night at 6 p.m. Eastern time to Friday night at 5 p.m. Eastern. There's a 60-minute break each day beginning at 5 p.m. Eastern. That's when we run our batches and send all of our volume over to our FCMs. So the minimum price fluctuation, so the tick value on this micro ether contract is 50 cents per ether. But since these are 1/10 of 1 ether, it's 5 cents per contract. So the tick value is 5 cents per micro ether contract. The product code on this new contract is MET. These are financially settled contracts. There's no physical settlements in these. These are monthly contracts. They're listed for the first 6 consecutive months and the 2 additional D's contracts. Final settlement delivery is by cash settlement, and it's to the final settlement is to that Bitcoin reference rate on the last trading day. And the last trading day is the last Friday of the contract month. So if it's a D's contract, the last Friday in December is the last trading day for that contract month. So taking a look at the specs and moving on to some of the features that these smaller, more precise contracts offer the community. You can fine tune your ether exposure. Since these are just 1/10 of 1 ether, you can add precision to your strategies. You can scale in and out of your precision, and you can use these smaller contracts to really fine tune your trading strategies and in the exposure that you want in ether. You can enjoy the price discovery of transparent futures. Since these are traded on a CFTC regulated exchange, the price that you're seeing on your screen is the price that everybody looking at their screen is seeing. So it's one price, it's one standard price. There's no price disparity from screen to screen. You can save on potential margin offsets with this contract. You can enjoy the efficiency of futures and save on potential margin offsets. If you were to trade our micro ether, our micro Bitcoin, if you wanted to trade the options against these futures, our cryptocurrency complex offer margin offsets. So these are capital efficient products. They are leverage products. So depending on where your broker, where EdgeClear is setting the margin, we're setting the margin right around 25%-ish. So if it is a $400 contract, the margin is looking right around $100. So micro ether futures are capital efficient. One of the biggest things, in my opinion, the biggest benefits of this product is the ease of going short. And that's one of the biggest benefits of futures in general. You can go short just as easy as you can go long. And if you own Ether, if you own spot Ether in a Coinbase wallet or some other cryptocurrency exchange, and you want to protect yourself from some downside price action, you can go short this micro ether contract to lay off some of the risk on your spot position. So the ease of going short is a real key benefit of this new product that we're launching. And then again, just like standard futures or just futures in general, futures can offer potential tax advantages. They are taxed at a blended rate. They adhere to that 1256 price tax treatment, where your gains may be eligible for 60% long-term and 40% short-term capital gains treatment. Taking a look at the minimum price tick. So here's an example of an order book. The price tick in our micro ether contract is 50 cents per ether. And again, that's 5 cents a contract. So here's just an order book example showing a one tick wide market. You see the market at 45.93.5 by 45.94. So just to keep in mind, the price tick on this micro ether contract is 50 cents per ether. But remember, this is 1/10 of an ether per contract. So it's 5 cents per contract. And looking at the ether margins, this was taken back in November when ether was trading around around 5,000, 6,000 change-ish. So the Ether margin at the exchange level is going to be set around 25%. So you're looking at $100 margin requirement from an exchange standpoint. Again, just check with EdgeClear to see what that margin is set at. And then we like to touch on basic futures fundamentals. I'm sure that many listening on today's call know the basics of futures. But if you don't, if you're just getting into futures contract and you're coming from the spot crypto world, futures work differently, right? So futures are leveraged products, and they require a margin requirement to enter into one of these contracts. So how much is one micro Ether futures contract worth? Again, it's worth 1/10 of where Ether is trading at. What margin is? Margin is a good faith deposit, basically, that your broker in the exchange will allow you to post for you to take control of that contract. And with futures, you can go short just as easy as you can go long. Like I was saying a couple slides ago, you can sell micro Ether if you own some spot Ether and you wanted to hedge some of that risk. You can go short just as easy as you can go long in our futures markets. And then futures have an expiration. These are finite contracts. So this contract in particular is a monthly contract. If you're trading the front month contract, that contract is going to expire. So you have a couple options at expiration. So when futures expire, and especially cash settled futures, so we're just going to talk about cash settled because that's what these contracts are today. A trader really has two options when expiration approaches. You can allow the contract to expire, and that contract will settle with a cash transaction based on where that Ethereum reference rate is at 4 p.m. London time on that last trading day, which is the last Friday of the month. Or if you wanted to maintain a position in this contract going into that following month, the next sequential month, you can roll your futures position. So if you are long one micro Ether contract and you wanted to maintain that going into the next month, you can sell that December contract and buy back a Jan contract. And rolling the position is key. If you want to maintain that exposure, you need to roll your position. And something to be cognizant of when the roll approaches. So when that expiration, when that last trading day starts approaching, you're going to see the volume in that front month start shifting over to the next sequential month. And something to really keep in mind, that you never want to get stuck in a thin market. You don't want to wait until the last minute to roll your position, because you're most likely not going to get the fill or the price that you're looking for, because the volume is going to be dwindling and going into that next market or that next month. The likelihood of you getting filled is decreasing because that liquidity is shifting. So something to keep in mind, if you're rolling your position, as you're approaching that last trade day, be cognizant of where that volume is at. Take a look at your order book and see where that volume is in the front month, because you don't want to get caught in a tight, illiquid market. So here's a depiction of our standard Ether contract. You see the August contract in black. You see the SEP contract in light blue here. So as July's trading, as you're nearing that last trade date in August, you see that volume start to plummet right around August 25th, right? So that indicates that the volume is shifting from that August contract, and right there you see an increase in the blue contract at that August 27th date, increase in the blue line, meaning that the volume is shifting from the August to the SEP contract. So we just want to be cognizant of when that volume starts shifting, when that liquidity starts shifting from that front month to the next deferred month, because if you're rolling, you want to roll when volume is plentiful and liquidity is plentiful.
And
taking a look.
Just want to say that also, if you can't find the volume, the CME posts the daily volume on each contract month on their website. I try to direct traders to CME's website to see what that volume is, and then once you start seeing it kind of shift, then you can make that move.
Absolutely. Good call, Max. So if you want to go see real-time volume in our markets on any one of our contracts, you go to cmegroup.com, pull up its product page, and you go to the volume tab, and you'll see where that market's trading.
Yep. And then one more thing, there's some questions out there about the data. If you're already enabled with EdgeClear, reach out to your broker and have them enable the MET contract. Unfortunately, the way that the data feeds are set up is once there's new products, it has to be manually added to your account. So just reach out to your broker and we'll take care of you. Just want to throw that out there.
Nice. All right, so on this slide, we're going to take a look at the Ether spot contract versus this new micro Ether futures contract, and we're going to compare the transaction costs. So full transparency on the exchange side, the exchange fee on this new micro Ether contract is 20 cents a side. So it's 20 cents per contract for an exchange fee, which is aligned with where we launched the micro equities back in 2019. If you remember, the exchange fee on a micro E-mini S&P, the micro Dow, NASDAQ, Russell, they were launched back then at 20 cents per contract. And that's what this micro Ether contract costs from an exchange standpoint. It's 20 cents per contract. And when you compare that to a spot crypto exchange, and you compare the notional of $400 worth of ETH in that spot market, so the equivalent of one micro Ether contract in the spot market is 400 ETH, right? And if you were to buy 400 ETH on a spot crypto exchange that tags on a 1.49% transaction fee per transaction, you're looking at a $5.96 transaction fee. So the total cost to the trader to buy 400 ETH would be $405.96. If you were to buy one micro Ether contract at CME Group, you would pay 20 cents in exchange fees plus the EdgeClear commission plus the NFA. So you're looking at I would assume you're looking at a cheaper cost per transaction if you're trading the micro Ether versus the cash ETH. And then when you compare the futures markets and micro Ether futures versus Ethers in the spot market, you'll see that there are some differences. There's no wallet requirement if you're trading our micro Ether futures versus trading spot ETH. There are capital efficiencies with our products. All of our micro Ether products are leverage products. If you're trading Ether on a spot market, depending on where you're trading or what you're trading, they may not be leverage products. Our markets are regulated by the CFTC. The regulation on the spot crypto side is evolving. So some of those markets may be regulated, most aren't. So it's a little bit of an evolving marketplace on that side. Potential tax efficiencies are gained in futures. Again, these are depending on your situation, not an accountant, but futures are taxed at a blended rate versus not taxed at a blended rate on the spot market side. We have clearinghouse risk mitigation. I know EdgeClear has a bunch of risk parameters in place to help protect traders from some big swings in the marketplace. In the spot market, we don't believe that's the case. CME Group has been in business for over 170 years. So the micro Ether contracts are traded at a 170 plus year old exchange. If you're trading on the spot market side, you're trading at an exchange that is relatively new. They may have only been around for less than a decade or so. And then again, the ability to go short with micro ethers is as easy as the ability to go long. And that's a thing for any futures market, but it's really something important to note when you're looking and evaluating this market for potential trading. You can go short micro ether, so you can manage some of your ether risk with these contracts, or if you wanted to express a short opinion, you can do so just as easy as you can go long through these contracts. And then if you wanted to short on the spot market side, it's just not very easy. You have to get approved at some exchanges. Some don't even offer it. So still evolving on that side. And then I'll be remiss if I don't go over the other cryptocurrency products that we offer at CME Group. So quickly, we offer a standard Ether futures contract. If you remember, we launched this contract back in February. This is 50 Ether per contract. Ticker symbol on this one is ETH. It's a large contract. It ticks in 50 cents per Ether, so that's 25 cents per contract. This is a monthly contract. This is financially settled, and it has the same settlement as the micro Ether. It settles to that Ether reference rate on the last day of trading, which is the last Friday of the contract month. We have two Bitcoin futures contracts. We have a standard Bitcoin contract and we have a micro Bitcoin contract. Our micro Bitcoin contract is 1/10 of 1 Bitcoin. The ticker on that is MBT. The minimum price fluctuation on that is $5 per Bitcoin, which is 50 cents a contract. When you look at our standard contract, it's a larger contract. It's 5 Bitcoin per contract. Ticker on that is BTC, and it's the price, the tick valuation is $5 per Bitcoin, which comes out to $25 a contract. And these mirror our Ether contracts in the sense that they're monthly contracts. They're cash settled to the Bitcoin reference rate, and the last trading day is the last Friday of the contract month at 4 p.m. London time. Okay, so let's take a look at how some traders may be trading the micro Ether futures. And the first illustration we have here is just a trader that wants to express a long opinion on Ether. This trader decides to go long by 1 micro Ether futures contract. At the time this slide was put together on November 10th, this trader bought 1 NOV contract at 44.80, so 4,480. That's where Ether was trading. The notional the notional value of the micro contract on that at that price is $448. This person sees the price appreciate to 47.8550. They want to close out that position at 47.85, 478.55. So in micro sense, that's a $15.45 profit. So this is a very simple example of a trader going long micro Ether to express a long opinion and capitalize on some price appreciation in the Ether market. So taking a look at what micros in general are allowing the active trader community now. So we launched our micro equities back in 2019, and what we saw and what our broker partners really told us over the years is that these smaller contracts are allowing traders to trade more contracts at a time. And if traders are trading more contracts, they're gaining the ability to scale in and out of their positions. Whereas prior to 2019, traders may have only been trading a one lot of an E-mini S&P contract, but they may now be trading 2, 3, 4, 5 contracts of the micro S&P. So what micro contracts in general are affording the active trader community is the ability to scale in and out. And I'm sure people know what this concept is, but just for an example's sake, with our micro Ether contracts, because they are relatively small, they're 1/10 of 1 ETH, a trader could gain the ability to go long 5 micro Ether at a certain price point and say that they saw price appreciate to different levels, and they only wanted to take off 3 contracts at a certain level. So in this example, this trader got long 5 micro ether around 4,600. When ETH is trading at 4,600, this person put on a 5 lot. As price appreciated near that 4,700 level, this trader wanted to lock in some profit, so they sold 3 contracts, maintaining 2 lot exposure. Now the price appreciated up to about 47.25-ish here, and so they sold another contract. So they're still maintaining a 1 lot exposure because this person may have thought that there was some more room for micro ETH or for ETH to decline. So then you'll see that this person closed out their position by selling their last remaining lots around 47.40. So if you're scaling out, these smaller contracts are allowing traders to, 1, trade more contracts at a time, and 2, potentially leave on some contracts after locking in profits, leaving on contracts to soar to higher profit targets. And the inverse is applicable here as well. What we're also seeing is that traders are scaling into a position. So if somebody was to put on a contract at 47.40 and that price starts depreciating, they may want to put on another contract at 4,700. And if it keeps depreciating, they might want to put on another contract at 46.50. So you could scale in, you can scale out. So you can average in and average out. So when you look at the historical volatility of Ether in general and cryptocurrency in general, the volatility is enormous. These are volatile markets. Bitcoin, Ether are up there in terms of our most volatile product at CME Group. So something that is great, volatility, also can present risk. So we like to say that volatility is an attractive trait of a market, but you really need to really watch yourself in terms of high volatility. Where there's volatility is opportunity, but there's also risk. So these are some volatile markets. Ether in general is a volatile market. Micro Ether, it's a relatively small contract, but please know where that volatility is at. And please understand that these markets that have the higher volatility presents higher risk too. So just be cognizant of that when you're evaluating this new contract. And then taking a look at who we expect to be trading this micro Ether contract, but who is already trading our micro and standard cryptocurrency contracts at CME Group. So right now in our cryptocurrency suite of products, we're seeing pension funds. Their primary use is asset allocation and diversification. We're also seeing pension funds use our crypto products to hedge some of their physical holdings. We're seeing hedge funds use our products for long-short strategies and also to hedge some of their physical holdings. We're seeing prop firms in all of our crypto markets. Prop firms are there to make the markets and also express a long or short opinion. We're seeing retail active traders in our crypto markets. We're seeing some retail in our standard contracts, especially standard Bitcoin, but the retail participation in our crypto products really took off when we launched micro Bitcoin back in May, and we expect that to continue, the participation to continue now that we have another micro contract in this micro Ether contract. So active traders are using our crypto contracts to go long and short. They're also using our products in combination with options to spread. We're seeing options traders use our products to go long and short. They're also writing options and generating passive income via writing options. We're seeing Bitcoin miners use our products to hedge some of their physical exposure and also to express a long and short opinion. And we're seeing corporates come to hedge some of their Bitcoin receivables, also to manage some of their money. So treasury management is something else that we're seeing in our crypto markets. So lastly, taking a look at risk mitigation and CME Clearing, we are a 170-plus-year-old exchange, and that we were founded as a risk management organization. So our ethos at CME Group is everything that we do is to manage risk. And the products that we have launched over the years have a risk management component to that. So risk mitigation is always at the forefront of our minds at CME Group. And another aspect of trading on a regulated exchange on a central limit order book is that we have a Globex trade matching system that has built-in safeguards. We have velocity and stop logic. We have an entire clearinghouse that is constantly looking at where our markets are at, where our clients are trading, and putting the necessary risk protocols in place to protect the market and protect the customers in it. So CME Group is all about risk mitigation, and we're an old exchange that is evolving with the times, but we definitely keep risk mitigation at the forefront of our minds. So with that, I will wrap. If you want any more information about these products, you can go to EdgeClear. I'm sure that they have some info for you. But if you're looking for the product specs that we discussed during today's session, you can go to cmegroup.com and search microether, and you'll pull up a product page where you can find all the contract specs and the fact cards and frequently asked questions, and we'll end there.
Awesome.
Do we want to open it up for questions next?
Yeah, so there were some questions about possibly a price action on Friday. This contract just opened up for trading well, technically last night, but Monday's trading session. So it's very, very new, but we're very excited about it and started trading last night. Any other questions out there? I don't know. John, I think you answered it all.
All right, man. Well, the one thing that I will add is that this market moves. And when I first started watching it last night on the open, the market quickly depreciated. The price quickly depreciated. We were down to like 6%, 7% overnight. And then this morning I wake up and I look at it, and now we're only down 4%, 5%. I'm just looking at it right now. ETH is up almost 2%. So this market swings and moves. And there are definitely opportunities to trade this thing in a variety of ways. So I really encourage you guys to look at this product, look at this market, but again, be cautious. Yeah, definitely agree with you on that point. Like John said, myed.ge/CME-microether has a bunch of information on the microether futures that you can go check out. So feel free to take a screenshot of this or just note it. Other than that, I think we covered everything, John. I really appreciate you coming on board and talking to everyone about the new CME products as you launch them, and we're excited for many more to come. Absolutely. It's my privilege. Thank you very much for having me today, and happy trading to everybody that's on the call. Awesome. Have a good one, everybody. Take care. Bye-bye.